morning, everybody. It's Friday, January 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, or if you care to chime in on anything we're talking about, please feel free to drop us a line in the chat area, and we'll get to your comments during the show. Real quickly here, overnight markets had March corn down 4.5 at 447 1/4. March soybeans were down 10 3/4, 12 1/4. And March Chicago wheat was down 6 1/4 at 606. This morning, the USDA announced an export sale announcement of 100,000 meal to unknown destinations for 23. Excuse me. As we get started here this morning, guys, I know Ben had a couple of thoughts that he wanted to, visit with us on here. So we'll kick it over to Ben to start us off.
Yeah, I'm just kind of commenting on some of the things going around the world with geopolitical risk. First and foremost, I'm going to touch on Ukraine. I think with the U.S. election year and our support of what's been going on there, it puts us in a bad place as far as world perception goes. And really what the intentions are of Putin as it looks to be that he is taking charge and control of the battle. We go back to 2022 and some of the things that materialized then. Some of the conversation was, will he stop with Ukraine or will he continue on, into Poland and places like that? And I think that's a big unanswered question here. And going into an election year, it would be a really difficult thing for the current administration to get on the podium and talk about defeating what was happening there and the concerns. So I think that feels like it's coming to a head. I don't think it's going to be over by any means with the amount of people that have died. I don't think you ever put away that hatred for generations. But I think the follow-on of if Ukraine has to back down, which I don't think they want to do, but I think it may be necessary at some point, is what are the intentions of Putin over the horizon? We've seen early in this where they've captured grain terminals. They've impeded traffic through the Black Sea. And is this something that gets worse? Tactically speaking, the Black Sea is a pretty important place, Odessa, and all the grain that comes out of that area. So I think while that's been kind of on a mute or diluted type of input to our grain markets for a while, I think what happens on how they resolve the situation there becomes fairly important to our markets, especially as we head over into planting season. The next thing is when you look at the U.S. right now, we always think of geopolitical and global things. There's a lot of turmoil with what's going on at the border. And we saw yesterday 25 governors supported Texas in their right to defend the border. I'm not a constitutional expert. I don't know who's in the right or the wrong based on the legalese of it. But I think it also creates more turmoil domestically as we head into an election year. And it seems to be a very pertinent topic, especially when you look at what happened in the Red Sea area with Gaza and the Palestinians. That's a border issue. And I think it's brought to the forefront of a lot of people's mind what we're going to do there. So I think it creates a lot of domestic turbulence. I read this morning that some more grain ships are being diverted around the Cape of Good Hope because they can't access through the Suez Canal. So it continues to be a problem. China has sent message to Iran that they need to pull back because they're really starting to have an effect on commerce, and they want the Iranians to reel back the Houthis. So I think there's a lot going on that can affect logistics. Not necessarily, I don't think anything's going to affect the logistics any further after we saw what happened on the Texas-Mexico border with train traffic. But I think the turmoil domestically creates an issue when every administration wants to go in an election and tell you that everything is hunky-dory. And we have our fingers in a lot of places right now. So how this affects us, whether positively or negatively, remains to be seen. But I think the big one is what are Russian and Putin's intentions should they get Ukraine to bend the knee here and look for some sort of resolution. I don't get the feeling that Putin wants to do that. So we'll see how that materializes. But all can have a tremendous effect on grain logistics and rerouting of demand, etc. So.
Yeah, It's good stuff. And like you mentioned, I mean, I think always the concerning piece to that, to add to that, is what's going on with China, Taiwan, that you don't hear very much about. And, as one thing takes center stage and, you take your eye off the ball. I mean, who knows what could go down here,
Yep. Well, and the
Scary times.
aftershock to that is what happens to the dollar if things get really chaotic domestically. What happens if we have a continuation of aggression in Ukraine and further beyond that? Typically the dollar is a reserve currency. It can find strength in really difficult times. That wouldn't be good for our grain markets. So I think there's a lot here that's unfolding.
Yeah, I agree with that. Continued weakness overnight here, and certainly in the soybean complex. Sold a little bit of meal here, we saw this morning. But any thoughts, guys, as we go into the weekend? It's kind of a continuation of a theme that we've been talking about. These markets are fragile. We've got a lot to digest as we're going to go into the next 60 to 90 days, right? And
Right.
you can't underscore the negative performance we've seen in the last 24 to 48 hours here.
Yeah, Dan, I'll just chime in real quick about South America weather. Widespread rains, central Brazil. Argentina is still dry, but production still seems like it's going to be spot on. But yeah, we'll just have to keep an eye on the maps. But yeah, and that forecast is through the next week, so I haven't looked at the extended. So
yeah, and then building on that point too, Buenos Aires Grain Exchange did increase their Argentine corn and bean forecasts slightly yesterday. They went up to 52.5 million tons from 52 on the bean crop, and corn went to 56.5 million tons. That was up from 55. So, we're not overly trying to dig into headlines here, but just I think it's throwing all this stuff at this market.
Yeah, I think it's kind of the thing we've talked about the last few days. We're trying to see if we can carve out some kind of a low here, and it certainly doesn't feel like it's ready to go explode higher anytime soon. A lot of the things that got us here to these low prices haven't gone away, right? I mean, we've just hopefully taken a little bit of bearishness off the table. Argentina, obviously, I think we're going to be looking over the weekend to see what the 6 to 10 day, 15-day forecast looks like. Right now, they have kind of a weather pattern coming back after this little dry spell here. So I think that's why we've been on the defense this morning. But to Ben's point, I mean, there's a ton of uncertainty, and it's election year and all those things. And, I don't think we really know what that means yet, and you can go look at the average rally and an election year, and those things are all great to kind of keep in mind and use as part of your game plan. But right now the reality is we're kind of stuck here just looking for direction. So hopefully we can hold these recent lows. I mean, it does go down easier than we'd like, I think, after a nice rally. You're not that far off the lows again. So we need to try to hold these lows and see if we can have some stability for the next week or so as we go into February.
Yeah, I would add that too when we talk about stabilizing. Looking at weekly closes. Different traders trade in different time frames, and I think that's something a lot of times that is lost on people. And the managed money contingent trades in very long time frames, looking for larger trends, larger moves. I would consider today a victory if we were able to have higher weekly closes. I think that if we don't, we probably have the a little bit of maybe a catalyst to try the lows again in both corn and soybeans. And we're hovering slightly above the weekly lows in corn, and that's last week's Friday settlement, and we're slightly below in soybeans. So when you look at those longer time frames, it potentially, if we could show some higher weekly closes, it might get some people that trade other time frames to take another longer look at what we're doing. And I think that a lot of times we get caught up with narratives that don't match our time frames, and it's one of the most fundamental things in trading. So something that would bring in people that have been long entrenched in here to maybe start to rethink their position, and looking at longer time frames a lot of times will give you a little more insight into what they're looking at. They're not worried about the next 3 to 5 cents, right? They're not worried about the next what's the daily range? They're in this for the long haul until they're forced out. So something that I'll be keeping an eye on today.
Yeah, no, good point. And, it's January 26th too. So it's a really tough time historically just to draw a line in the sand and say this is bullish or bearish. This is see a lot of money made or lost on accident here in this time frame. So a lot of stuff still coming our way, and it's hard not to get anxious and fall into you need to sell all your crop for next year or buy it all back, or it's just not a time to make a large stance, and that's what that market's kind of telling you that, right?
Yeah, no, that's a great point, Justin. I think too, as we look at it next week, we're going to flip the calendar and we're going to start setting crop insurance in February. What better time in the next, we'll call it 3 to 4 weeks to run through all those different type of scenarios and say, if crop insurance falls here for corn and soybeans, what is the best thing for my farm? What decision do I have to make? That's the real talking point, I think, as we go forward.
Yeah, I agree, Dan. I think that really starts to paint the picture of what risk looks like going forward. It's a cornerstone of a lot of risk management plans. It's not the only part of it, but it certainly is something that you can start to define that, and looking forward to getting to that period.
Well, and it's like, in discussions this week with different folks across the Corn Belt, that's the big question, right? I'm being told that soybeans are more profitable in some scenarios, and should I plant more soybeans, and yield drags, and I mean all this stuff is starting to become the flavor of the day or the talking point right now as we're looking for headlines every day, right? But the reality of it is the crop insurance piece, and in talking with agents, I know, Ben, you talk with a lot of crop insurance agents as I do as well, and it is a serious deal this year versus the last couple of years, where those prices for certainly on the corn side made that decision pretty easy for a lot of guys. It's not a cut and dry deal this year for a lot of folks, from what I'm hearing anyway.
Yeah, and I know we talked a little bit about crop insurance last couple of days. And I don't know what you guys think, but this has got to be probably the largest, if not one of the largest gaps between what cost of production numbers are for guys and where their revenue guarantees are going to line up with like an RP 80%. I would imagine it's probably the largest gap we've seen. Which is just the risk has never been larger, I guess, to plant corn. That we've seen historically. So
yeah, that's interesting. We'll have to look. We'll go back and look at that, because that is an interesting point, Jason, just what that relationship is. I'm sure it's pretty easy to find out, but so I don't know. I mean, like I said, it's just that seems to be, in having meetings yesterday, I think it came up in almost all of them was like, I'm being told to plant beans, but I plant corn. Well, maybe this is a year that has to be a decision, or you have to put the pencil to paper and see if that's the right way to roll. And let's talk about, private products that as well, like use the full scope of the tools that are available to you, because maybe corn with some of these banded products and some of the different things that you can do, maybe that makes that situation look a little differently. But until you try it out or run those numbers, I mean, it's hard to, you're just shooting at a fish in a barrel type of thing.
Yeah, I would expect, to that point, I would expect a lot, we saw a big uptick last year for different reasons, right? We did it a lot last year because you could guarantee profit, basically, right? So you're buying up revenue, which had been a long time since you could do that. So these private products became more popular, at least with the growers we work with. And I'd expect a similar trend this year, and it probably for more of a defensive reason, right? Trying to get your guarantee as high as you can so you don't have to sell at 3-year lows. So that's probably more of a defensive play, but I would still expect a similar type trend this year.
Yeah. And it's a great point, Justin. So I think that the takeaway for us here this morning is let's have that conversation, right? Like let's start looking at that, running the numbers, running the scenarios, because, you sit here today and it's not awesome to have 4 $4.76 corn for new crop corn, but let's look at all the different options to get us at least in a position we're comfortable with going through planting and into you know what could determine the price action for the rest of the year.
Yeah, and you know, a lot of people have sales on too, forward sales. So there are
Sure.
people that have sold, you know, $5, $5.20, $5.50, you know, some portion of that, you know, 2024 crop. We had you know, decent time to do that. So if you factor that in with where you can get some of these crop insurance policies, it might not be too bad, right? But it's, again, you have to look at it all together.
Now that's a really good point. Jonathan Nordstrom comments that fertilizer keeps creeping higher while corn is hanging. Yeah, Jonathan, I'm not familiar with your area, but yeah, I mean, I think inputs are certainly going to be the big talking point, and as well as cash rents. We've talked about that a number of times on the show. Again, going back to, you know, your individual operation, your numbers. I know that in some areas things have stabilized a little bit on the input side. I don't know, you guys talking?
Yeah, that's like our farm. I mean, that seems to have bottomed a little while ago. So I agree there. And I think this kind of goes back to my point yesterday on, you know, I think corn acres are in jeopardy. It'll be interesting to see, you know, how people respond. You know, I mean, we're starting at such, in my opinion, you know, these estimates are kind of hovering around that 93 million acres of corn, you know, down about 1.5 million or so from last year. And that's still near historic highs for corn acres. So I guess we'll see. You know, some of these numbers that we look at for cost of production, rents, they just don't seem sustainable. So either we're in a new price level, you know, and the market's going to have to adjust and lower input costs. You know, how does that happen? People stop buying them or buy different products or cheaper products, or, you know, extend the combine purchases out another year or two. You know, all those kinds of things that add up. But I agree. I think it's an interesting environment, and curious what the market's going to do here, as we talked about heading in through February. It seems to me like usually they want to try to get the acres first, especially if they're bearish. They'd rather get the acres, make sure they're going to get planted, and then move on from there. But every year is different, so we'll have to see.
Sure.
You know, it'd be interesting too, right? I mean, we always we always talk about how easy it is for the corn market to get its acres back if it loses them. You know, so right. I guess maybe I wouldn't be surprised for us to keep it really low and see if the farmer's willing to plant a bunch of corn at low prices. And if we do, it is a miss on acres, or there is a, you know, bad weather and weather starts to affect corn acres as well. I'd imagine corn can get those acres back pretty quick with a nice pop in price, you know, and just the psychology of a nice price rally usually can pick up corn acres pretty quick.
Yeah, it's just one of those things where you know, you have to go higher faster to get that done, right? It's not overnight. So it's not, you know, the problem is once you get crop insurance, that's your guarantee. Right now you can still switch some acres here and there. So a lot of people apply for corn and beans and then switch some acres, but that's still your guarantee price. You know, so I think certainly the more, you know, aggressive type hedgers, you know, that'll lean on those guaranteed bushels, they're willing to sell against them. Those are usually the acres you see first. Right, the ones that are saying, you know what, I'll sell X% of my bushels against my guarantee because I just effectively raised my guarantee, right? Yep. So, yeah, I agree. But that being said, you know, does the market want to play that gamble or not?
Yeah, right.
Maybe we have enough acres of both right now. You know, if South America finishes off good, it just takes so much pressure off of us needing acres of either one, really.
Yeah. So. Oh, very good. Rye, real quick, just a couple minutes here. We've wrap up the week on the livestock side for us.
Yeah, I mean, we had a huge surge in price yesterday in cattle, feeders, and hogs, all back to prices we haven't seen in the past 2 months. Packers are paying up for cash cattle, 174 to 175 in the South, so that was up $1. Dressed prices were up $3. The really big surprise, and I don't think it was much of a surprise. I think we expected a down in weights because of the weather, but there was about a $10 decrease. So after that number came out, the cattle market exploded. So looked like it was a big short covering rally in the feeders, and we know the funds have been leaning on the short side. So I think that just kind of overall really solidified this nice big rally. And we came right up to the 100-day moving average in some of these in the live side of things. So the trend is looking good, and this is like a really good opportunity to start looking at maybe managing a little bit of downside risk here. Even though all systems are firing on all cylinders right now, there's still some risk here. You know, the market's getting ahead of itself a little bit. We got this big premium in February live cattle now, and you know, it hasn't happened in a long time that we've been able to establish a premium and really hold it for a long time, especially a $3 premium. So there could be some downside risk here. So I think now's a good time to maybe just start to look at maybe increasing a little bit of coverage here and in the meats kind of around the horn, even though, you know, the trend has obviously been up. It's been a great rally. So we'll see how we finish out the week, but I wouldn't be surprised to see a little bit of covering here. You know, so I would expect some kind of volatile price action today.
Oh, very good. Appreciate that, Ryan. Just came into the open. Got March corn down 4.5 at 447.25. March soybeans down 10, 12.13 is the last. And March Chicago wheat's down 13.25 at 5.99. Real quick, on Monday, we will be hosting our exclusive webinar for AgYield consulting clients at 2 o'clock Central Time. We're going to have John Wenzel from StoneX. He's the director of fuel and energy markets, going to be visiting with us about some trends and different things he sees within those markets as we go through the spring. So pre-registration is still open. We've got that link for you that's been sent out. If you need it, please get in touch with us and we can get you registered. As always, streaming live on X, Facebook Live, and YouTube Live every day that the markets are open, 8:15 Central Time. We hope everybody has a great weekend. We look forward to talking to you Monday. And thanks again for tuning in. We'll talk to you soon.
Yeah, thanks, guys.